First rates will just start coming up on your screen, and any second they will just start trickling in. There you go. First rates actually, well, they look very different actually for the mid and the small cap stocks. Yes Bank, Vodafone, Central Bank, IPCA, Bank of Maharashtra, GVK, UCO Bank. The tiny toons are really, having a good exciting start, so to speak. Will it sustain? Let's see. Now let's look at Autumn Investment Infra. I'm not so sure what this company does, but it's locked up and a large block deal has happened there. Now the newsmakers. The crack in MCX is not very, very powerful. The decline in Navin Fluorochemicals on strong volumes, I think, is evident. There is, and just when we thought, Tube Investments was not getting recognized, it's popping right up in terms of the total volume. But the IT space is where you need to go back in terms of the price action, also in terms of the rub-off effect of the Accenture news. So none of the IT companies in India are feeling the heat. So could it be a case of what is happening with Accenture will not hold true for the Indian IT sector per se? Maybe yes, because that was what markets are telling us.
That's what markets are telling us, and also we saw quite a bit of slide on some of these names yesterday itself, so probably part of the news seems to be factored in. But just I wanted to pull up the stocks of Shreyas Shipping as well, because there seems to be some changes in the price which was discovered. That stock is showing a slide of 17% on my screen at open. You also have Navin Fluorine, which is down a good 9%. That's after the leadership change is going to happen there. So the street is worried as to who will take over. You also have a cut on MCX, but as Nikunj pointed out, not a deep one at that. On the gaining side, you have names like Somani Ceramics, which is doing okay. While MCX is down, it's an inverse move coming in on some other names like 63 Moons, etc. as well. And overall, if you look at the sector setup, it's metals which is shining away in the trading session. So Hindalco, SAIL, Hindustan Copper, Hindustan Zinc, National Aluminium, these are the stocks which have started with a green tick. Aurobindo Pharma, a solid run-up of 6% already at start. You also have Gland Pharma, which is continuing the up move. The only selling or only red on the screen is IT and Auto. So Auto is on a bit of a back foot, waiting by for that number to come in for the month of September in terms of sales, and only then taking a call, but it's not a bad open at all. The advanced decline ratio is quite positive, very close to that 19,600 mark at the index as well.
In fact, Q2 GDP, a strong Q2 GDP would also have an impact on metals, because one-sided top 5 stocks, if you look at the gainer, you would see metals panning out of the JSW, Tata Steel, all of that. Kunal and Nooresh are here with us. So let's talk about the opening trades, the first trades which are coming on their radar. Kunal, what are the stocks or names which are cropping up on your radar?
Well, I'll look at a bit of defensive names. So IPCA Labs is something which looks very attractive on the charts, heading towards a breakout, trading at closer to 920 mark. So that's the stock which I looked at in the open.
Nooresh, what about you? First trades?
So that would be a buy on Oil India. That looks promising for a short-term breakout going forward. So a good entry point at 290.95.
Mark Matthew joins us now. Let's connect with him to understand the market mood, the current commentary from Fed, and how will this impact emerging markets like India. Mark, so good to have you back. Thank you for joining us. Is this the new look, Mark? I haven't seen you wear these fancy glasses.
Well, these glasses are not new, but thank you for noticing them. I am in a new studio in our office, though.
Okay, so the backdrop which is new. I was just wondering what is new about Mark today. But the new thing for financial market is that Fed has changed their outlook. They are talking about a solid recovery for the US economy. And that unfortunately is not translated into great news for emerging markets. So do you think the reversal could happen now in terms of US bond yields going higher and money moving back to emerging markets, to US equities or US bonds?
Well, you're right to identify the Fed's more hawkish stance as the reason why equities globally have been soft. It was the 27th of July when the Federal Reserve removed its talk about a recession from its statement at the meeting in July, and that was the peak of the S&P. It's down about 5% since then, and other markets are as well. So it's ironic that not having a recession, the market interprets that bearishly. Why? Well, of course, because it means yields will be higher for longer. And I do think that the Treasury yield at around this level is offering very serious competition to stocks. Not just the treasury yield, but investment grade corporate bonds in the US are now giving you over 6% yield. That's a really high yield for an asset class which has never defaulted more than 1% default rate in the worst year ever, the global financial crisis. So I know that sounds bearish, everything I said, but actually I would still stay in stocks. I think that one of the good things about taking the recession out of the forecast is that we do have strong growth, and the third quarter results that will come out middle of October should show the S&P with a positive year-on-year earnings growth for the first time in 3 quarters, and if you exclude the energy sector, it'll probably be up about 3.5% to 5%. And next year, once again, assuming no recession, earnings growth is looking like it'll be above 10%. And by the way, for 2025, the analysts are also looking for around 11% earnings growth. So I find it difficult to see stocks going down in a backdrop like that. It's just that you also now have a very attractive alternative in the bond market that you didn't have for the last 10 years.
Mark, we were just speaking with Cameron Brand of EPFR, who tracks the fund flow situation very closely. And he was telling us that because of what's happening in the US macro scenario, there are some pressures. In fact, outflows are happening from Asia funds, and they may take a bite out of India as well. But India dedicated funds are actually seeing or witnessing record inflows. You track India closely. Do you see this outperformance on flows continue for India despite what's happening in global macro?
They're hard to predict, and I think one major headwind for India and the entire emerging asset class has been historically a strong dollar, and of course we've got the dollar index at about 105 now, which is a problem because there is less appetite for emerging markets when their currencies go down. But the good news is, as you know, that JP Morgan is including Indian bonds, Indian onshore sovereign bonds in its global benchmark index, and that will be attracting tens of billions of dollars of inflows into rupee denominated assets, bonds over the next couple of years. And I suspect that Morgan Stanley will also move Korea from emerging to developed in its equity benchmark next year, which would also necessitate, I think, several $billion finding new homes in the emerging equity space. And I believe India would be at the top of that list too. So the fund flows, I believe, will remain positive into India. The only caveat is if the geopolitical situation, which unfortunately, India is now in the headlines about, continues to deteriorate, and then at the margin you might see less foreign buying, but I still think that the local buying is ultimately what's going to drive the market in India. So it's nice to have the foreign inflows, but I don't think they're a necessity.
Because foreign flows, at least in the last month, haven't been that supportive. It's only the domestic flows that have actually supported, Mark, because in the last month there was an outflow to the tune of around 25,000 odd crores. But if I can just drill it down further, within the Indian markets, which are the pockets do you think are likely to do better? Is it going to be those domestic-facing names, the consumption story, or do you find a case to be made for the export-facing names, the defensives of the world like IT and pharma, because they had been beaten down?
I think it's a wonderful buffet, and basically everything on the menu is good. There's almost nothing in the market sector-wise that I don't like. Everything you named is good, and broadly speaking, if we get nominal GDP growth of around 6 to 7%, you add on inflation, real GDP growth in the low teens, we're going to also have earnings growth of around the same magnitude, and therefore should expect around 10% return in the stock market each year. And so within the stock market, what will outperform, I think it will really depend on the year and on the month even, but broadly I'd just be invested in the Indian stock market on that macroeconomic basis that GDP growth will be in the 6 to 7% range for the next few years. And that does take you to the consumer, that does take you to the banks, and then IT is growing very nicely with, I mean, India, there was a study done by Stanford University, and they found India is the country that will benefit the most from generative AI in terms of the talent pool that is accessible in India to work on it. Defense, you mentioned also. So I think it pretty much all looks good.
Are you happy with the 10 to 11% kind of return? Because usually, people come to Indian market to expect higher growth. And even, yes, growth is there, the earnings growth is going to be supportive, but everything is good at a price, right? The mid caps and small caps have had a runaway rally. Are you not worried about it getting frothy or the valuations being a bit expensive?
For the mid caps, yes, for sure, that is the case. And I think there's still going to be very good returns in the mid caps, but one has to be selective given the big run up that you talked about. And for the broader market, I'd be perfectly fine with a above 10% return, especially because I do believe that notwithstanding the high oil price, India's current account balance is shifting to a structural surplus driven by import substitution. That is now possible given all the investments in physical infrastructure that have been made. And therefore, I don't think we're going to see the kind of strong, weakness in the, that doesn't make sense, but the big weakness in the rupee that we've seen over the last 10 years.
The other global theme which India seemed to be benefiting out of is the capex theme, especially towards energy transition and renewables. We are witnessing Indian capital good companies, the big ones, the mid-tier ones, or even transmission tower companies starting to talk about a large export opportunity, be it wire and cable companies, all of that. Do you see this global capex theme and how manufacturing can be outsourced to India, a lot of high quality capital good manufacturing? Are you interested in this theme? Would it interest you?
Yes, I am. I think it makes sense. And as I said, that the physical infrastructure that you need to make things is now being put in place that didn't exist, say, 10 years ago. And we've seen tremendous amount of investment in productive assets just over the last couple of years, and many foreign companies have expressed an interest in making things in India, and the ones that have already gone ahead have been successful largely in doing that. So I do think that's one good place to be, yes.
Sure, point taken, Matthew. But tell me, what's the biggest overweight for you? What is the sector of stocks that you have been incrementally buying into?
Financials would be our largest overweight, just on the premise that NPAs have been come down to single-digit levels, and the capacity utilization and the corporate sector is 80% plus, and so there's a strong demand for loans. We like financials generally, banks in particular. That I think is our largest overweight.
Okay, Mark, really appreciate you joining us on the show. So financials remain the top overweight, liking India at the moment despite the kind of macro uncertainty that we are seeing on a global basis, and expecting 10-11% kind of returns from India, which as per him are quite healthy. But let's get stock specific and see what's happening in the markets right now. Well, on the gaining side, it's Eris Life Sciences, which is up 7%. Aurobindo Pharma, remember they had mentioned it in the con call that they would be launching Revlimid in the month of October. So there is some excitement on account of that. So pharma is clearly one space which is perking up, and then comes power. So NTPC is doing quite well. You also have NLC India, which is in focus on account of that Odisha plant that they are launching. And then some names like RR Kabel, etc. are also seeing an uptick. So it's a very, very vibrant market that we have at our hands. On the losing side, it continues to be Navin Fluorine and MCX, which are down in the trading session, Ajay.
That's correct. In fact, I'm surprised even after hovering at 13-year highs, NTPC continues to witness follow-up buying out there. In fact, even for that matter, L&T is witnessing follow-up buying. But there is one stock from the PSU pack which had caught attention yesterday, and that was NBCC. almost 11,000 crore in market cap, and they are getting 5,000 crore from a land transaction which they are about to do, 5,700 crore to be precise. Pawan Kumar Gupta, CMD of NBCC, is here to talk more about that. Mr. Gupta, good morning. Thank you very much for your time. Talk to us about this transaction, sale of land at 5,700 crore commercial space in World Trade Center, and how would you utilize the proceeds which would come to the company?
This is our flagship project of World Trade Center at Nauroji Nagar in South Delhi, bang on Ring Road. We have already sold commercial property worth 7,200 in this project, and total value of the project is around 13,000 crore. So 21st e-auction we have already launched for the balance property of 5,700 crore. Around 15 lakh square feet is the area, and we hope to that around 2,000 crore worth of property at least will be sold in this auction. And this is the Government of India property. The proceeds will be utilized for construction of this World Trade Center and 7 GPRA projects, which includes the offices and residential colony for central government officers and staff.
This 5,700 crore which will come into the balance sheet or come into the kitty of NBCC, how will this be spread?
Our projects worth rupees 6,000 crore are already awarded and they are under construction. So this money will be used for construction of those projects during the current financial year and during the next financial year.
NBCC follows a cost plus model. Given that where inflationary pressures currently are, how is the cost plus model working?
Cost plus model is working very well because we get our margin and all cost is billed to the client. So even if there is an inflation, that is billed to the client, NBCC doesn't get affected. So it's a very, very financially sound model.
Taken, Mr. Gupta, but could you talk to me about what was the book value of this project, how much money you had invested? Just wanted to understand what kind of gain or loss you are making on this project.
The sale value of this property is around 13,000 crore and investment is around 2,500 crore. We get our fees on marketing as well as on construction. The money that flows goes into the central government kitty, which is utilized for the construction of houses and offices for central government, on which again we get the fee.
Okay. Mr. Gupta, if I have it right, the order inflow target for the full year was close to around 12,000 crore on a standalone basis. Are you sticking with that? What kind of recent conversations have been with respect to order inflows?
Yes, we are sticking to that. In fact, it's very likely that we'll exceed that target. We have already got orders worth around 4,500 crore. And other major orders that are in pipeline is the construction of balance FAR of Amrapali property and construction of houses for armed forces on self-sustainable basis in Delhi. That order is around 2,700 crore, which is likely to materialize shortly. And there are 7 locations for Ministry of Social Justice and Empowerment on which they want to construct their regional centers. So the total value of that order will be around 300 crore. That is also likely to fructify very shortly.
Okay, so the order inflows have been strong, the pipeline is looking good, but what about the execution? Because the street was expecting that the revenue this year could be somewhere between 10 to 11,000 crores. Are you looking at bettering that?
Yes, we have a target of 10,600 crore and we are very sure that it will be achieved and it could exceed by 200 crore.
Mr. Gupta, one quick question on your operating costs. We understand a lot of players such as yours, when we speak to them, they are talking about kind of a shortage of skilled manpower. They talk about also, contractors being in very tight supply. Are you also witnessing any such trend in the industry?
Yes, that is the fact that we lack skilled manpower on our projects. But we have a regular process of skilling. We are, in fact, training the manpower of the contractors so that they are available for future projects. Till now, around 4,000 labor, we have already given them the certificate of skilling. We provide them the training on the project. So, but it's a fact that the country needs more skilling as far as construction labor is concerned.
Mr. Gupta, thank you very much for your time today. We'll take a short break, come back and put the spotlight on the hospital space right after this very short break. First 20 minutes in trade and markets have stabilized, at least no follow-up selling coming in. We'll wait for an hour or so. Look at that, almost flat line right now. But get you some more trading, investing ideas with Safir Anand. We spoke to him earlier in the day, strategist and investor. Hear out his thoughts.
Well, I have been buying some of the PSUs, ex-banks, for example, where there is a substantial start of a capex cycle and the companies are sitting on very huge order flows. And their historical problems have been more to do with non-recovery of money, because it does not seem to me, and at the risk of being wrong, that's what market is. It does not appear to me that there will be non-recoveries of dues. And that is perhaps one of the reasons why companies, for example, in the power sector in PSUs have done exceptionally well. There are very large capex plays in some of the other PSUs, which are more engineering companies, etc. So when you feel that you have to sort of eliminate the risk of downside. If you've eliminated the risk of downside, then even if you go wrong, you don't pay a very heavy price. And therefore, some of these companies appear to be, doing the right things right now by bagging those orders and not overbidding in terms of literally zero margins in order to bag those orders. In fact, some of the companies are refusing new orders in order to protect their margins or to increase their margins.
On the show, I get a message immediately, ask Safir about the next talk idea. How am I supposed to respond to it? It's your choice. I'm asking a question, somebody's asking me on digital media.
No, see, like I said, I've named the sectors that I'm invested in, and you are all aware that I'm not a SEBI registered advisor, therefore it's only my personal portfolio. But I have looked at adding some of the banks. I've been buying Jammu and Kashmir Bank from a price of almost 30 rupees, but I've also added it last at about 75 odd rupees. Recently, I've added Punjab National Bank because I do believe that things are going in the right direction.
All right, let's move on and get you the latest from the mutual fund industry. The regulator SEBI gets stuffed with mutual fund industry after cases of malpractices are found in several mutual fund houses. We learned that from the sources that the market regulator has asked the industry to soon form a committee to keep a check on such misconducts. My colleague Ankur Mishra has got more details on this. Ankur, tell us.
Yes, sources say that mutual fund industry may come up with an individual committee by themselves for keeping a check on any misconduct or any wrongdoing, because we understand through sources that there was a meeting which was held with mutual fund industry of SEBI chairperson, and this was AGM of MFI. In that, SEBI chairperson has once again nudged mutual fund industry for self-regulation and has asked to form a committee for keeping a check on these kind of misconducts. Apart from that, we also understand that SEBI chairperson has lauded the effort of mutual fund industry for retail participation, but the regulator warns that if at all there are bad apples in the industry, they should be alienated by the industry themselves. Remember, this is not the first time that regulator has asked for such kind of committee. Earlier also in the month of May, there was a direction from the regulator regarding the same to form an ethics kind of a committee, but we understand that the work on ethics committee may start very soon, and soon you may see an individual committee by the mutual fund industry themselves self-regulating their conduct.
Right, Ankur, thanks a lot for that. Sunita Reddy, Managing Director with Apollo Hospital, joins us now. Mr. Reddy, good morning. Thank you for joining us. By when will the new facility will be operational? We are talking about how things are moving up for you in Kolkata. Since it is at a partial construction, how much money is one looking at putting in this facility?
So the building currently houses 225 beds. We paid 105 crores for it. we estimate that by FY25, with the addition of 130 crores, we will have operating 225 beds and then move up to 300 beds in FY26.
Sunita, this second facility in Kolkata, which you've gone ahead with, talk to us about why exactly are you expanding in the same market? Are you seeing big potential that you're going with the second facility there in your existing market? Over and above the territories, the additional territories that you may have marked about?
We've understood the micro market very well, which is Calcutta. And our occupancy in the current facility is 80%. So if you combine the fact that the demand for beds is currently existing and that the Apollo brand is very strong, we do believe that this expansion is warranted. Add to that the cost of this acquisition is reasonable. For 235 crores, we are getting a 225 bed facility. So in terms of cost per bed, it's only 1 crore per bed. So I think it'll meet our IRR hurdle rate of 20% in the 5th year.
Hi, Mr. Reddy. This is Anisha also joining in the conversation. Talk to us about what's the current trend with respect to the occupancy level or the average revenue per operating bed. How the latest key metrics trending?
So currently, we are at a very healthy occupancy. I think we've touched about 68% occupancy. Going forward, yes, the festive season is there. But we will continue to grow the occupancy as we've added new doctors into the system, and we believe that with this we will be able to maintain current occupancy levels.
What you understand is that soon there could be lowering of GST on health insurance premium for seniors. With the decision pending in the next GST council meeting, how do you see this move could help you?
Yes, so currently 40% of our payer mix is from insurance, and this has grown by 35%. So what this will do is to give more people access into corporate hospitals like ours. So we have a very healthy payer mix of 40% retail and 40% insurance. And we believe that this will continue to grow, and it will be reflected in strong RPOBs. So in terms of RPOBs, we are at 60,000, and on a blended, we're at 53. So in Tier 1, we're at 60,000 without doctor's fees. So we do have an RPOB of 70,000 in metro Tier 1 cities. So clearly, RPOB is growing. It'll grow at about 5%, depending on case mix.
Yesterday, we also understand that in the diagnostic space, companies have taken certain price hikes. In fact, just a while back, a couple of such firms were there on our show, clearly saying that pricing seems to be bottoming out in the diagnostic space. Have you also done the same? Would you shed some light? Is the price competition kind of coming to an end there?
Yes, so there are price hikes in the diagnostic space. For this exclusive menu of tests that we're now going to offer, which is a high-end clinical work, we've set up 2 laboratories that will do this. There will be a 20% increase in the cost of these tests.
Ma'am, and also can you tell us how is your private label expected to grow going forward, especially with respect to the pharmacy business? What kind of scale-up can we expect?
Yes, so currently it's an 18%. We believe it will touch 20%. And clearly this is driven by both FMCG products as well as generic medicines, OTC drugs.
Okay, thanks Ms. Reddy for joining us. So that was the latest coming in from the management of Apollo Hospitals. For now, the trends are on the positive side, whether you're looking at occupancy, and of course triggers like health insurance GST reduction is something that could augur well. But what is not doing very well in the market right now is Naveen Fluorine, and as we told you, the leadership change is happening there. But what was the significance of the man which was there at the helm, and why is the street so worried that we are seeing a 14% cut on the counter? Lisa, tell us, what did Mr. Radesh bring on board, and have they announced any names as to who's going to head the company now going forward?
Right, Anisha. So Navin Florin is under pressure on the back of this key management change, and Radesh Welling, he has resigned as the managing director of the company. Well, he had joined the board way back in December 2018, and he played a pivotal role in bringing about changes in the company in terms of capex program, which exceeded around 2,000 crore between this time FY20 to 23, and the full execution of this capex that was anticipated to be realized in FY25 in the next year. And he'll be staying till 15th December for smooth transition. But during this period, Mr. Vishad Mafatlal, who is the executive chairman, he will steer the operations of the company going forward. And the analysts, what they are saying is that they are not anticipating much significant disruption to the current capex plans, apart from the potential short-term performance impact, and that is mainly because of the destocking issues. And Navin Florin, they had already taken measures like taking the necessary capabilities and assembling a skilled team for the projects, because even their employee expenses that also had risen. So nevertheless, the analysts are saying that the future capex initiatives may face uncertainties, as Mr. Welling had identified multiple projects which are expected to be announced in the next 12 to 36 months. So he was an integral part of the company. And Morgan Stanley also came out with a note on Navin Florin. They said that they maintain an overweight with a target price of around 4,951, and they have said that over the last 5 years, Navin had 4 changes in CEO or CFO, and this is the most frequent changes seen versus the other chemical companies. So Navin Florin has taken measures such as ESOP in the past, but now we have to look forward in their call, which is likely on 4th October, where they'll discuss the reasons behind this and how they'll steer the company going forward from here.
Okay. Well, today is World Heart Day, and like we say, that dil ka mamla hai. And my guest on the show is someone who has really dedicated his life to take care of cardiac problems in India. And it's such a pride for me and an honor for me every time when I welcome Mr. Devi Prasad Shetty, Chairman and Executive Director of Narayana Health. We've called him today not to discuss the financials of Narayana Health, but to understand from the doctor himself that what can one do every day, choti cheezein kya kar sakte hain to take care of your health. So Dr. Shetty, what a pleasure and an honor to always have you on ET Now. Thank you for joining us.
Thank you. Thank you.
So what are the tips on Stock Market Channel? We always use the word tips. So with the doctor also, I will use the word tips. What are the tips to keep your heart healthy?
Yeah, I have few messages and tips. First message to everyone is that do not wait for your heart to break down. See the doctors before it breaks down. What we call as a preventive maintenance. Everyone past the age of 30 must go for a preventive checkup. May not be very detailed preventive checkup, but go for a preventive checkup. Especially people who want to get into very extreme sports like a cardio or a marathon race or a football. It's very important for them to get a detailed evaluation of the heart, because in India, nearly 10 to 15% of the adult population have some type of a heart disease, and 50% of the heart patients suffer from silent ischemia. That means even if they develop a heart attack, they don't know about it. So my suggestion to everyone is that please wear a smartwatch and try to walk at least 8 to 10,000 steps per day. There are now a lot of research articles publishing that 10,000 steps per day has a magical impact on your health. So how do you walk 10,000 steps? It need not be, you don't need to walk in the morning or evening. You can walk whole day. All of you spend so many hours on the mobile phone. Get a earphone, put it into your ear. When you are talking, start walking. So walking while talking will give you 1 additional hour of walk. So count the number of steps in your smartwatch, and that will tell you where you are at that particular time. So walking is something which is extremely, extremely useful for your health and the heart. Sitting is the next cigarette. So it is very important for you to, even I know your job today means you have to sit on the chair most of the time, but every 20 minutes, get up, try to do some work standing, then you sit. Every half an hour, get up out of the chair, walk for 2-3 minutes, then come back and sit. Because sitting is extremely bad for your health as well as your posture. Mind, you have to be very careful with your posture. Most of the backache and the neck pain and the leg pain is due to bad posture. Go to internet, find out what is the best way to get into the right posture. Then I recommend everyone to practice yoga. I know everybody wants to build big muscles. Even I was like that. I loved bodybuilding. I used to participate in all these contests, but nothing like yoga. Yoga has a magical impact on your life. Believe me, at least for 10-15 minutes every day, practice yoga. And then please quit smoking. Check your weight. Have a weighing machine at home, which gives you the weight in pounds, not kilos. When it is in pounds, when it goes down, you quickly see something is happening. And today, the villain is not the oil. Villain is the carbohydrate, rice and chapati. These two things are not very good for you in large quantity. Try to restrict the carbohydrate. And my last advice to all of you, become spiritual. I'm not saying you should become religious, become spiritual. Because knowing that somebody up there protecting us, making sure that everything is done the way it should be, is a very, very, very positive force in your life.
Sir,
good luck. Thank you so much.
Can I have a follow-up question? Just 2 more follow-up questions. I'll extend my appointment with you because you've raised 2 important points, sir. One, avoid chapati, which means avoid gluten. Is that what the message from you is?
No, I like to, I'm not saying you should avoid chapati or rice, but reduce the consumption of carbohydrates and sugar, and instead go for the protein and vegetables and substitute with millets and other type of food. Carbohydrate is the villain, not the oil today.
Follow-up question, sir. I don't know about Anisha, but Ajay and me in the studio are certainly 40 plus and we are not hiding our age. At 40 plus, what are the regular health checkups which we should do to at least ensure that how the aging is affecting the heart?
Sure. You should go to any clinic or a diagnostic lab or a hospital, empty stomach in the morning, and get your blood tests done. They know what are the standard blood tests, which gives all the blood sugar and the thyroid level and all these blood tests, simple blood tests, about 40-50 parameters. Then you should go for a echocardiogram to see how your heart is, a ECG, a chest X-ray, and a ultrasound of your stomach. All these things can be done within 2 hours. Most 40 plus people, I recommend you to go for a calcium score of your heart that shows whether you have any early blockages. And if you have a CT calcium score is positive, then you should go for a CT angio. So these are the things, if you do it, we can almost assure you, almost guarantee, I would say guarantee, almost assure you that next 365 days, very, very unlikely that you will have any major healthcare event, not only heart, any other healthcare event.
Right, Dr. Shetty, very useful conversation. Thank you so much for joining us on the show today. Thank you very much for your time and your guidance and support all the time. Today we are celebrating World Heart Day here on ET Now so that you can take care of your heart better, stay healthy, don't take too much of stress in the market. We have all that covered for you.
Marketers are getting extended.
That will only put pressure on people's heart and stress, huh?
No, I'm just thinking through it, and is it important? Is it required? Is it and those are the 2 factors which I think matter to me. Importance is that if the trading starts, is this a natural hedge or this is something which we think that okay, it's a hedge which in a sense will be only helping exchanges, not so much so the real-time hedging. Second, is it necessary, and the cost at which it will happen, the settlement chaos, lifestyle changes. SEBI has put out a statement, not a statement, but SEBI shared a data that 9 out of 10 FNO trades right now are wrong.
Yeah.
So all we are doing is that if you're extending the options market, you're actually extending that
You're
entire
providing a bigger field to play.
Exactly. So when you extend the trading hours, so sometimes things are necessary, sometimes they are important, sometimes you're doing it just because it's neat to have and it's good to have kind of a extended trading hour. There are a lot of exchanges where trading hours actually are much less than India. Yeah. There are a lot of exchanges in the world where trading hours are actually the number of trading holidays are much less than India. I mean, we trade on 1st of Jan, rest of the world is always shut.
Yeah,
and remember those Chinese equity markets just shut for 10 days, that golden
But
week.
Chinese are the most gambling instinct. You should go to Macau and find out.
Maybe
on
they
those
use
lesser
it as
number
a
of days, they do a lot.
Yeah, but just the stress of work is less. Maybe
Yeah.
they're just using it for other kind of stresses.
But guys,
that
take care of your health, take care of your heart. Like they say, dil ka mamla hai, important 40 plus. I mean, Devi Shetty has clearly said that go easy in terms of smoking, increase the number of steps, wear a smartwatch, get yourself regularly tested, quit smoking for sure, and in general, be happy and have some spirituality to your life.
Let's take a short break on that note, come back, more news and analysis on the other side. Don't go anywhere.
Welcome back. Well, the two sectors which are actually doing rather well for themselves is pharma, which is higher by almost 1.25%, led by Aurobindo Pharma. That excitement about the Revlimid launch in this month itself. You also have Eris Life Sciences, which is doing quite okay, and then PSU banks are also perking up. So Indian Bank, Bank of India, Union Bank, and then metals also continue their up move. Hindustan Zinc, Hindalco are some of the names that you need to watch out for. It's only IT which is on the back foot and seeing some cuts. No surprise there given the kind of commentary we have heard from Accenture overnight. But real estate sector, that has been one of the best performing sectors so far. A lot of tailwinds right from the policy action to the kind of demand that we are seeing on ground. Let's discuss all of that with the management at Arvind Smart Spaces as well. Mr. Kamal Singhal, the MD and CEO of the company, is joining us on the show. Hi Kamal, good to have you on board on ET Now. Thanks so much for making time and speaking with us. Well, let's talk about your latest launch which has come in and the fact that you're looking at foraying into the Mumbai market as well, right? That's the headline at least that we got a couple of days back. Talk to me about that. What are your plans about Mumbai going forward?
Sure. Very good morning. As you said, we just very recently last week launched one project in Ahmedabad. This was one of those large horizontal ones again. And this turned out to be a very, very great success and consumers took it very enthusiastically. In fact, we booked more than 300 crores in a couple of days time, 3 days time, and the momentum continues. So that has been a great news. Yeah, you're right. Mumbai is our focus now. We are quite deep into our existing markets, which are three of those, Ahmedabad, Gandhinagar and Bangalore. And we are kind of investing further deeper into these two markets already, three markets rather. We have kind of started few things in Pune a few years back. We've learned the market from that standpoint, and now we think that it's time for us to go bigger in the state of Maharashtra, which basically for us includes MMR and Pune put together. And as we speak, there are a lot of efforts on ground going on, and we are hopeful that in next couple of quarters, we should be able to announce at least one or two projects in the city of Mumbai, basically MMR.
Follow up there, Kamal. What is the kind of top line that you're looking from the MMR region? And it's getting very competitive, right? Everybody, right from prestige to everybody wants to get into the Mumbai region again. Do you think there's enough demand?
Oh, yeah. I mean, I think demand in general for real estate has been great. I mean, it has been very, very widespread as expected. It's nothing that was not expected a few quarters back. Post-COVID, everybody thought that things will improve and they did improve. But the kind of growth, the kind of momentum, the kind of spread that we saw was unprecedented. And the good news is that it has been sustaining for quite a few quarters now. And looking at the characteristics of demand, we believe that this momentum is supposed to be continuing across the country. Mumbai, of course, has seen that. And there are signs that at least in specific markets, which are more like mid-priced, more like a 15,000 to 20,000, 25,000 rupees per square foot on a carpet area basis. I think those markets are the big chunk, and they are expected to continue to do very good. There could be slightly different things in very high-end and luxury markets in that sense. Our target is to capture this biggest segment, which is 15 to 20,000, 25,000 rupees product, and more like markets in Thane or Mulund or those kind of areas. And we are very hopeful. In industry, generally, there has been a good momentum in general per se from the demand point of view. But at the same time, I think there is a consolidation happening in industry where branded and organized players are preferred better by the consumers and the sector in that sense. And this double engine consolidation along with generally good momentum gives a fair chance to players like us to sell and sell well in these markets.
You've got a lot of land bank which is in Ahmedabad. Is this legacy land bank you have, the old land bank which you're developing, or this is just going to be new land development which you will do?
No, not really. I mean, we by and large have nothing which can be called as legacy land bank. Everything that we are doing is pretty much greenfield. Either they are newly acquired lands or they are on joint development basis out of little less than 20 projects that we are doing across. Only one project is on the land which belongs to the parent company, and that too on an arm's length basis on a DM structure basis. Otherwise, everything else is greenfield, and we are basically acquiring newer lands to expand this business.
Well, what's the total potential of Arvind Uplands there in Ahmedabad? And also, I want to understand, Ahmedabad is witnessing very good volume growth, also because of Gift City developing there. A lot of financial guys from Bombay, we know, a lot of business houses are setting up there. So, there is influx of capital and big groups out there. So, do you think that this momentum may continue in Ahmedabad?
Oh yeah, Ahmedabad is one of those examples where urban development has set very different kind of standards for the country, not only in terms of overall planning and the infrastructure, etc., which naturally attracts more people to come in and set up their businesses, etc. Even the conventional businesses, so to say, are doing pretty good. There are multiple engines working in this city which augment real estate which have been augmenting real estate in the last few quarters. Gift, as you mentioned, is one of those, and it's getting quite a bit of interest from people across the country, in fact, even from overseas. A lot of people who have been settled outside India, but they belong to this part of the country, Gujarat, they also have a renewed interest in investing in Ahmedabad. Conventional industry, pharma, textiles, all these industries are doing pretty good. And of course, the new age industries, financial, etc., is doing much better than what it used to be pre this euphoria, which has now come in the form of Gift and other things. So I think multiple things are happening in this city. Infrastructure is more than geared up. This is the only city possibly in this country which can say that, okay, I'm ready for next 10 years to take this kind of volume and growth. And all these things are making sure that demand is quite good. Supply is very good. Quality of supply is very good, and predictability is very good, and hence interest not only from the ordinary consumers but also from consumers outside the city is very, very healthy. And we are very hopeful that it's going to be sustaining pretty much. And we've seen this growth in our own numbers, and we sometimes surprise ourselves, and we've been doing this last 3-4 quarters ourselves, that few of these projects that we've launched, they have just gone off the shelf in no time.
Sure, Kamal, you're talking about, these projects selling off the shelf, but if I have it right, your bookings have been declining on a sequential basis for the last 2 quarters. Do you expect to arrest this decline in Q2, and are you on track to achieve the 1,000 crore of sales mark in FY25?
I think booking has been seeing pretty healthier trend. Maybe you're reading the financial numbers here. Last year, last 2 years, we did 600 crores of fresh booking. Last year, we did 800 crores of fresh booking. This year, we're expecting to do the same 30-35% growth in the numbers. As we speak, we are very confident that we'll be not only able to achieve these numbers for half one, 30-35% growth of over whatever we did in the last year, but we should actually be doing better than what we did or we expected as we started the year, when we started the year. So as such, booking have been very healthy. The growth has been at least 30-35% year on year for the last 5-6 years. And this year should be no exception. All the blocks are in place. And in fact, if I were to be a little more specific about half one itself, we have already surpassed a growth of more than 35%, which was the target, and we should be surprising ourselves once again on this half.
Okay, we are waiting to be surprised. Kamal, thank you so much for making time and speaking with us. So that's the commentary coming in from Arvind Smart Spaces. Very good response to the Ahmedabad launch, and Mumbai is something which is becoming a big focus area as well. But what's the focus area of our chartist right now? Nooresh, what's the chart buster idea?
So that's a chart for Oil India. Now, if you look at the stock price had topped out around closer to 300 odd levels back in June of 22. Since post that, it corrected sharply all the way down to 180. Now we are back to those 290 to 300 prices. We've consolidated between 275 to 295 for the last almost 1.5 month. So long-term breakout in the making. Out here, stop loss to be kept at 285, target price of 350 to 400. Good volumes were also seen yesterday compared to the last 6 months.
Okay, what about you, Kunal? What's the idea that is popping up on your screens?
So that is on IPCA Labs. The stock is going through a triangular formation. So it's been a fantastic uptrend for IPCA Labs since the month of May, June lows, when the stock was almost at 665, 670 odd mark. And from there, the stock has formed a pattern of higher highs and higher lows. As you can see, that the stock has been consistently making this pattern. Even in this phase of consolidation, the stock has made a higher low pattern. So this is the first base for the stock price, forming a support closer to that 840-50 mark. This was the second one, with the stock made a low around 850, and the third was around the 870 mark for IPCA Labs. The stock is now getting towards a breakout. This is the breakout point for the stock price, and once that pattern gets completed, we are expecting that the stock would replicate this 150 point to 200 up move on a similar trajectory from this 950 breakout for IPCA Labs. So looks very interesting and poised for at least another 20 points, 20% to 25% upside.
20% upside, that's quite meaningful. Nooresh, what are the other stock ideas which your radar is throwing?
So that would be first be a buy on SBI. The stock has been forming a base around 585 levels for the last few sessions. A risk reward trade here, stop loss at 585, target price of 625. Second is a buy on ONGC, very similar chart to Oil India, back to the June 22 highs. Closer to that, a big breakout possible here as well. Stop loss at 185, target price of 220.
Kunal, what are your top stock ideas then?
So I'll suggest two buy calls. The first one is actually a buy on L&T Finance. That's a stock which looks charged up today, back about that 130 plus mark. So looks interesting for a target of 140, stop loss 125. And IDFC First Bank, I think that's also another stock which is popping up on the radar at 94 levels. Would look out for targets of 104, stop loss at 90.
Okay, thanks Kunal for that stock pick. IDFC First Bank, and of course from the pharma space, IPCA Labs is something that he's quite positive about. We also have a decent up move on M&M Financial, Cochin Shipyard, Sobha as well, and the overall market as well, after seeing a bit of a slide, is also perking up a bit. So we'll track that, but after this very short break.
All right, so home improvement continues to remain a strong theme, and Century Ply is one of the plays which the market likes in home improvement. Keshav Bhajanka, Executive Director at the company, is joining us now. Keshav, morning, thanks for your time. The new plant which you are coming up with in Andhra, which will be on stream in the third quarter, just a few months or weeks from here, how much will it take your overall capacity to? How meaningful is it? Will it start contributing this year onwards?
Good morning. Thank you for having me. In Andhra, we are coming up with two capacities. There's going to be a capacity for laminates and a capacity for MDF. In laminates, the new capacity is going to be in higher sizes. So till now, we are predominantly an 8x4 play, whereas larger sizes are required for both the export as well as the toilet cubicle market. So in Andhra and laminates, we are going to be setting up our first capacities of 14x6 and 10x4 quarter, larger sizes. In MDF, the capacity in Andhra would be 950 cubic meters, which is going to double our existing capacity. That is likely to come on stream within H2.
Do you think this year's festival demand will be different from last year's festival demand? Because we are really getting very mixed picture so far.
I think, yes, the market is slightly difficult. But having said that, there are multiple reasons towards the same. The festive period normally is a good period for us, but if you look at Q3 historically, it has not been a very strong quarter, predominantly because of lower working days. However, I don't see any challenge with regards to year on year. I think year on year we will pretty much be on track.
And so, talk to me about the long-term target that you have, 12,000 crore revenue by 2031. What would be the big contributor of that? Are you looking at, let's say, exports as well? Is it the domestic demand which continues to be that strong that you are aiming for the CAGR of over 15% now?
Like you have said, we're very, very bullish on the domestic market. And the export piece, definitely, we are looking to grow in exports, but the predominant share of that 12,000 will come out of domestic. If you look at it, we're investing across product categories. We're investing in new capacity in plywood, new capacities in laminates, new capacities in MDF and in particle board. So we are fairly confident right across all the segments. And I think the domestic demand is there. There will be short-term hiccups and there will be short-term spikes. But overall, I think the picture looks very good. We're in the right industry at the right time and in the right market.
Now, we are observing that one end of the consumer spectrum, which is the luxury and premium, the affluent Indian is spending more on watches and homes, on their cars. You are very serious in approaching that segment, and that's why the Manish Malhotra version which you've launched. But I want to understand a little more in specifics. How meaningful can this premium luxury laminate sheet business become for you? Are the margins also higher? Can it become very meaningful in 3-4 years?
You see, we are predominantly a luxury player in any case. We're at the highest end of the pricing point in the entire spectrum. With this range, we are very confident that yes, we will now be in a product category where we haven't been, which is uber luxury or ultra luxury. Having said that, the difference that it will create will not only be in terms of the volumes, but it will also be in terms of the perception. Because like I've said earlier, we are now moving from a designer laminate to a branded designer laminate. And this is a new concept for the industry as a whole. So I think this is going to play both the roles. It is going to lead to upswing in volumes as well as leading to a change in the perception of the brand.
Keshav, 15% is good, but is it good enough? Your GDP, nominal GDP growth is about 14-15% for a category which is still not penetrated, for a category and a company and a brand which you represent is gaining a lot of market share from the unorganized market. Is 15 like a low watermark number? 15% is not bad in absolute terms, in relative terms. But looking at the way how things are moving in the category which you represent, 15% maza nahi aaya.
Firstly, it's not 15%, it's higher. So I think, the number was 15 plus, but I think it is looking at overall 17-18% growth. Having said that, you see, it is not just about turnover. We have to grow and we have to grow profitably and sustainably. We are not looking to add, different diverse ranges. We're looking to focus on the segments where we are operating. And I think that this is a fair target. Today, it leads to almost 3.5x of our current turnover. So I think that it is a fair target. The objective, jaise aapne kaha, maza nahi aaya, but the objective will always be to grow faster, to grow higher. But at this point in time, this is what we are striving for.
Keshav, is there a lot of competition from the Chinese imports as well? Because at one point of time for MDF, etc., that was a big worrying point. How is the competitive intensity in the industry right now?
If you look at the South, definitely there is competitive pressure from imports as far as MDF and particle board are concerned. However, domestic players are doing well, predominantly in markets that are landlocked. Even in the South markets, you will see players are doing fairly decently because the timber costs are lower. But I think this is pressure that we'll have to contend with on a long-term basis. The world is much smaller. It's a global economy now. But this forces us to be more efficient, to come up with more innovative products. And now if you look at it, the percentage of premium products in MDF is going substantially higher. So I think we've all found a way to negate the same.
On that note, we let you go. Appreciate you making time and speaking with us. That's the latest coming in from Century Ply. Have a big target of 12,000 crores, a revenue CAGR of over 15%, and the domestic demand is something that makes them very bullish. But shifting focus to what's happening in NIT learnings as well, pull up the YTD chart, or actually since the time the company listed in August itself, there was quite a bit of volatility and the stock was seeing quite a bit of interest of late. So we thought we'll discuss with the management as to what the prospects are. Mr. Sapnesh Lalla, the CEO and Executive Director at NIT Learning Systems, is joining us on the show. Sapnesh, hi. The last time I spoke with you, you talked about the client spends being weak and compressed. What's the situation like right now?
So the spends have been compressed over the last 9 months to 12 months. They had started going up, but they have compressed over the last 9 months or so. However, we've seen more propensity to outsource L&D. So our deal velocity has accelerated.
When do you anticipate a recovery in the spending which you're talking about? Would it be in the second half or could it spill over to FY25?
So we think there will be some recovery as we lead up to the second half of our fiscal year. There will be some recovery, but we feel that recovery will achieve momentum next year as things get closer to the elections.
Okay, but there will be further pickup as things get closer to elections. What about the new client additions or client engagements deepening? Because there is a focus area as well. Have you managed to add any more clients and any more new clients in the last couple of months?
Yes, we've accelerated the addition of new customers. We've had 4 new customers each quarter for the last 2 quarters, and we are continuing to see significant interest from new customers to look at outsourcing. So we believe that the investment, the disproportionate investment in sales and marketing will cause increased acceleration in new customer additions, and we are starting to see that.
Sure, but what are the nature of these spends that clients are willing to do? Is there a specific L&D program that they are maybe spending more on? And overall about this AI, how are clients viewing this?
See, our business is more focused on outsourcing of L&D. So we are agnostic as far as programs are concerned. However, to your question about AI, I think AI is going to be a very significant driver and it will significantly change the way people's work, people do their work. And to that extent, we have been investing in research and development around AI for the last 9 to 10 months. And at this time, we are doing pilots for a number of customers to improve the efficiency and the impact that learning programs can bring using AI. And what we are finding is that using AI, we are able to do things which were very, very hard to do without AI. So, for example, running traditional classes or traditional e-learning, what we are able to do with AI is significantly more powerful. And we expect that over the next several quarters, AI aided learning will become more mainstream.
So let's talk about a bit on margin terms, your pricing, etc. Are clients asking for renegotiation on those? Would it impact the margins any level?
Our margins have held steady. We believe that we will continue to be able to deliver margins that are upwards of 20% on a go-forward basis.
So margins about 20%. And is the overall growth rate on top line too going to be over 20%?
From a long-term perspective, that's our growth guidance, that we will continue to focus this business on a 20% growth rate, as well as better than 20% margins. We did about 22% growth in Q1.
What on merger and acquisition opportunity? Anything in the pipeline that you're looking at? Any company to acquire, any capability, something which is on the anvil?
Yes, we are in discussions with a number of target opportunities. Of course, we will talk about them when they reach a point of disclosure. But suffice to say that we are in discussions with a number of organizations at this time.
Mr. Lala, and I hope we'll speak next when you do materialize some of those stocks which are right now underway for the mergers and acquisition as well. So that's about NIT Learning System. But shifting focus back to the market, and this is an ET Now insight that we are getting for you. As we head into the month of October, what are the likely trends that have panned out historically for the month of October? Which stocks have managed to stand out? My colleague Ansh is joining us with that insight.
Sure. So this is a study based on seasonality. We have collated data for the month of October over last 10 years. And as per that, many major indices have delivered positive returns over past decade. Nifty has delivered positive returns in 9 out of last 10 Octobers, whereas Midcap Index have had a perfect record with positive returns in every October over past 10 years. The banking and financial sector consistently delivered positive returns in all 10 Octobers, but PSU Bank, due to maybe volatility, have still managed to impress positives in 8 out of last 10 Octobers. Now let's take a look over how the indices have performed in October over past 10 years in average terms. As you can see in the table as well, Nifty averaged a 2.9% return in October, whereas mid-cap index has slightly performed better, averaging 3.3%. However, the real standouts were the banking and financial sectors, delivering returns in the range of 5 to 9%. Now, if we see the FNO stocks, we'll see that ICICI Bank was the top performer in October with a flawless 10 on 10 positive closes, achieving an impressive 11.5% average October monthly return. Other stocks in our list also did well with 9 out of 10 positive closes, returns ranging from 5.7 to 11.4%.
As we head into the new month, let's also analyze the indices that have performed in October. Ansh just gave us that, in fact. But moving on, we'll take a short break and then we come back and get you the stocks which are moving, what are the triggers out there, and also what is driving the 6% rally in Aurobindo Pharma right after this.